Good Sunday. Well, now it's afternoon, everybody. And thanks for joining me today on November 13th. So for those of you who grew up in the 70s, you should remember the significance of November 13th. It was the day Felix Unger's wife asked him to leave. For those of you who have no idea who Felix Unger and Oscar Madison were, you can call me Boomer or Old Guy, because that was one of the all-time great shows. It was called The Odd Couple with Tony Randall and Jack Klugman, who later went on to star in one of my favorite series of all time, Quincy. In any case, happy Sunday. Hope all is well. Today, we are going to cover a couple of things. Let's see. We are going to cover, what are we going to do today? Today, we're going to cover a little about the election, certainly the crypto blow up. And then if we have time, I'm going to get into stock market, bond market. I may not. If I don't, then I will certainly do another video intra week. And thank you for those who emailed and said they'd rather do video than just read a lengthy newsletter. I don't know what the percentage is, who likes what, but I like doing both and I don't mind doing both and I enjoy doing both. So sometimes as I get into the traveling phase, I forget to do videos because it's a little more difficult with crummy bandwidth on the road. In any case, if you like this video, please give it a thumbs up on YouTube. If you don't like it, then I'm sorry, and you probably won't watch again. Let's see. So let's dive right into it. Oh, first, you know what? First, let's do this. Think what I'm going to give you 3 years: 1929, 1980, 2008. What happened in those 3 years? 1929, 1980, 2008. Well, 29, the stock market crashed, beginning of a financial crisis, a big one called the Great Depression. 1980, we know inflation was soaring, and we had also a financial crisis. The Hunt brothers tried to corner the silver market, and that led to a crisis. 2008, what happened? We all know the great financial crisis. What also happened in those 3 years? My friend Ralph knows this because we traded emails about it. In those 3 years, the Phillies, the Philadelphia Phillies, and I think whatever their predecessor was in 29, won the World Series. So, you know what they say about correlation and causation, and I say this tongue in cheek. 2022, is it a financial crisis? Well, we know we've got a lot of inflation, largest bond market decline ever, longest bond market decline ever, and the Phillies did come oh so close to winning the World Series. So what's the takeaway? Make sure the Phillies don't sniff a World Series again. My brother won't appreciate that because he is a lifelong Phillies fan. All right, with that, let's get into the election. If you read what I wrote, and I'm sorry for the coughing and the sniffling, when the Yankees played Cleveland in Game 5, my son and I picked up some, what turned out to be a virus, and that was, I think, like 3.5, 4 weeks ago, and I've been struggling ever since. It's slow to heal, to get better. I went through the whole course of meds. I tested negative for everything under the sun. It's just going to take time. So I am prone to coughing fits, which will be interesting because I go back to live TV in the city this week to do 2 or 3 shows. So that'll be interesting to see if I can control that. In any case, sorry, the election. I wrote about coming into it that I thought I couldn't model it like I model the presidential elections, which bothers me. Because I always think, I want to move my mic a little closer. Because I always think things should be able to be modeled quantitatively. I've tried for years. I cannot model the midterm elections. The presidentials are coming up in under 2 years. So in less than 23 months, I'm going to start running the models again. It's fun. We'll do webinars. It'll be a good time. What I thought was coming in, I thought the Senate would get one more blue seat, which apparently it's going to get 1 or 2 blue seats. And I thought the House would go to the red, and they'd get 20 more seats than they had before. We clearly don't know where we are now going into it. I think what I saw this morning was that if numbers are right, the Democrats had to sweep every single open seat to get to 218 or 219. I forgot the number, it doesn't matter. The likelihood is that we're going to have split and divided government. For the market-wise, the election is, and midterms usually are, a big non-event. If the Democrats do sweep the last, however many open seats there are, I don't think it would be the death knell for the rally. But what the concern is, if you've got blue, then the current pattern of spending in an inflationary environment becomes very worrisome for the market, because in order to get rid of inflation, you have to destroy demand. And you wouldn't do that if the government spends more money. The government's got to spend less money. They need to tighten financial conditions, and which obviously leads to more challenging economic times. But in any case, I don't think I said this at the time, elections is a total non-event for the market. Gridlock in Washington typically is very good for the markets. When you have either a split with House and Senate, red, blue, or both red with a Democrat in the White House, markets do fairly well. So, and I think that is likely the case this time around. It's not a turning point, meaning just because the election's over and something happened in this gridlock, the markets aren't going to just turn on a dime and say, oh, well, we have a blue White House and we've got a red and blue or a purple Congress. Let's party like it's 1999 again. No, not how it's going to work, but that's the general tailwind, if you will. Because I always, when I talk about seasonal trends, I say tailwind and headwind. That's a nice tailwind. Let's go on to, so that's the election. Again, not a big deal. If you're politically inclined, it is a big deal, but for the markets, it is not. Let's pivot now into the news. There's a lot of news this week. We had the election, we had the CPI report, and we had what I view as probably the most important thing is the complete and utter collapse and blow up of I'll say the crypto market. I know I'm really probably overstating it, but there's a guy, Sam Bankman-Fried. If you follow crypto at all, you've probably heard of him over the years. I forgot when I said this, and it's irrelevant when, but I remember a long time ago, I said, in every mania, there becomes usually one poster child who epitomizes the insanity of the mania. So in 2008, leading up to 2008, I remember that really tan guy, Angelo Mozillo. He was from I can't even speak today, Countrywide Credit. Yes, there were a lot of different faces that epitomized all that was wrong with the great financial crisis, but Angelo Mozillo really they were into subprime lending and just questionable ethics. And that was the kind of the blow up. Yes, we know all the banks blew up and a lot of Fannie Mae and Freddie Mac blew up and AIG blew up, but I feel like, Mozillo is on Fox and CNBC and Bloomberg, and he was so pompous and arrogant, and the country didn't know better, but he knew better. Well, this Sam Bankman-Fried, a bit of an odd bird. If you look at him, he is kind of slovenly dressed. So some take it as a sign of being disrespectful. He's got this like bird's nest hair. I think he's just an uncomfortable guy. It's like Zuckerberg was always kind of an odd dresser, and doesn't matter. I mean, how you dress doesn't matter. But Sam Bankman-Fried, it seems like if you look at he's always involved in big crypto deals, creating exchanges, and lately trying to bail out people who fell on hard times in crypto. And as we know, and I'm saying cryptocurrencies as this big overarching theme that is dominating the headlines today. Years ago, I said, boy, this guy epitomizes the craze. So I said Angelo Mozillo. During the dot-com bubble, there were a lot of, that was the greatest bubble of since 1929. But the dot-com bubble, you had Henry Blodgett. I think he was at Merrill Lynch. Mary Meeker was at Morgan Stanley. Oh, there were a lot more that now my 56-year-old brain's not remembering. But Henry Blodgett really had the greatest fall from grace. He was banned from the industry for life for doing not so ethical things. And when you go back, each mania in 1980, the Hunt brothers who tried to corner the silver market, there's always that poster child that is associated with the mania and then the collapse. Oops, sorry. So Sam Bankman-Fried, I don't know, 6-8 months ago was worth somewhere between 15 and 20 billion dollars with a B from nothing. He was the man, the crypto man. And today his company just filed for bankruptcy protection. They say it was voluntary, but they had no choice. The question is, we don't know what's fact and fiction, but it's being reported across the board that FTX, Frank, Tom, X-Ray, and their related parties, which are far-reaching, they took what is supposed to be client money, invested it on a leverage basis in cryptocurrencies to shore up their own balance sheet. Now, I have not read intimate details about how all this happened and what happened. I can tell you this, when they talk about getting into client accounts, there's nothing worse. That comes right back to a modern, Madoff. How did I forget Bernie Madoff? This is what Madoff did over a period of decades on a $50 billion scale. I don't know if Sam Bankman-Fried is guilty or not, but certainly what's being reported doesn't show favorably on this guy who was the king of crypto. Now, that is all happening. FTX did file for bankruptcy. And it's being reported that the Sam Bankman-Fried, I've never met the guy, I've seen him on TV, that's about it. He lives in the Bahamas and he's got properties in non-extradition countries. Supposedly, I have no idea if he did it willingly, knowingly, whatever, but it's certainly raising a few eyebrows and things are curious. So I don't imagine he ever comes back to the United States because there's probably law enforcement waiting to put handcuffs on him. What I do want to do is I want to pivot. Years ago, so you all know I have not been a crypto fan. I've never owned a cryptocurrency. I've never owned a cryptocurrency, easy for me to say. And I kept saying along the way, a lot of folks have come to me and said, you're old, you don't get it, you're a boomer, the new way of the world, blah, 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 blah. There's now 25-ish thousand cryptos. They protect against fiat currency like the dollar. Well, the dollar's gone straight up, crypto's gone straight down. They're a great hedge against inflation. Inflation's gone straight up, crypto's gone straight down. Let's see what else is supposed to be great about crypto. Oh yeah, if the markets go down, crypto won't, because everything is decentralized, blah, blah, blah. Here's what we know. I called it .com 2.0 during the entire craze. This sounded and felt so much like the .com bubble. The only exposure that I ever had, one of our 18 strategies currently owns Coinbase. And we originally bought, I think, a 2% position. That's it. I wanted some exposure, and I still do, but I want it regulated. The sex appeal of crypto and the exchanges was that you're basically anonymous, and that's people wanted to be able to transact without government intervention. Folks, that ship has sailed. It ain't gonna happen. I can tell you that categorically. No way. People were now, even the crypto folks are begging the government to intervene and regulate. Crypto market's been like the Wild West. At least the .com bubble, those stocks traded on exchanges where money was quote unquote regulated and protected. The crypto exchanges, they weren't. I made fun of my buddy, Matt McCall, who sold his business. He's always owned a ton of Bitcoin. I think Ethereum too, but I'm not 100% sure. And what I always liked about him was he told, I don't have, he put a whole bunch of crypto, 7 figures of crypto on these memory sticks, and he locked them in a safe because he didn't fully trust the exchanges. And it was way above my pay grade, but now I understand what Matt was a smart guy, why he did what he did. And he was right. So he's got Bitcoin on memory sticks, and that's his forever. It's in a safe and he can do what he wants to. It's not on an exchange. He doesn't trade it. He owns it. He does trade things on exchanges, but small amounts of money. So now we have really the final, what I think is the final blow up of cryptocurrencies. They are not going away. No, I think we are approaching what is going to be a golden era of investing in cryptocurrencies, because regulation is coming and that Wild West mentality is going bye-bye. So those of you who rightly said, well, I wouldn't invest where it wasn't regulated or there weren't and listen, you know my feeling. I like low regulation, but not no regulation. I stand for sensible regulation. Markets need regulation. You can't, they're not purely capitalistic, and you need to protect the good from the bad actors. And clearly in crypto, we've got a lot of bad actors. So right now, I'm going to share my screen, which I tend to do from time to time. Where's my screen share? And so we're looking at Bitcoin right now in US dollars. Let me change, I want to make it a little, let's go to a year. Here is Bitcoin over the last year, and I think I put up a year and a half. I gotta put my cheaters on. Sorry, there we go. I can see again. And you'll see, it's 67,500. What's interesting, the last rally up on Twitter, all these crypto guys were chirping at me, you're an old guy, you don't get it. We're going to make fortunes. And then I had people sitting on planes telling me their kids work for all these crypto exchanges. They would never go into my business. That those guys are going to make millions. They're going to put me out of business. You don't get it, blah, blah. And you're right. I didn't get it. And I said the same thing during the dot-com bubble. It's on the website. It's on record. I didn't get it. My famous story about losing my doctor as my client, who put all his money with Merrill Lynch in dot-com stocks in second half of year 2000, and promptly lost 75% of all his money. All of his money. In any case, that's not relevant for today. My point is, when you had the last crypto melt up, and it became clear to me that was an insane and generational mania, you wait for the blow up. So the decline was fairly orderly. The first decline got cut in half. The dot-com bubble peaked on March 13th of 2020. And then within 3 weeks, the dot-com stocks were down 40%, 40. Then they rallied into September of 2020, and then they really cut them loose to zero. Back then I did own one dot-com stock. I bought not for a client. I bought it for myself, and it was called athome.com. I don't know what it was. I just remember I bought 1,000 shares at $42, and I wrote it to zero. Lesson learned. I do think cryptocurrencies are here to stay. I do think you're going to enter the golden age of cryptocurrencies. I do think they're approaching a very investable level. I do think people should have exposure. So yes, I was critical during that last melt up. It's been an amazing decimation of wealth from almost 70,000 to, where are we now, 16,000 and change. I just quote Bitcoin. So here we are today. We're getting to that point where you kind of can close your eyes. I'm not saying it's the ultimate bottom. I don't know. I have I haven't been able to fully model trading Bitcoin yet. Maybe I will never will, but I do feel as though it's you were in that zone. I mean, could it go to 10,000? Absolutely. Would I be shocked? I would not be shocked. Could it bottom right here? Yes, it could. But I do think that you're getting to the point where if you want to be involved in crypto in a small way, maybe you start at 1% or 2% and you cap it at, do your own risk tolerance, 3%, 4%, 5%. That's it. You're in that zone where it's probably a good buy. But boy, for years, so many people call me an idiot. And listen, plenty of times it's warranted for people to call me an idiot. I make mistakes every single day. I've been pretty good on the manias. Dotcom bubble, February of 2020, February of 2000, I was on Bloomberg and I said, I don't know how this ends. I can't figure it out, but I do feel strongly that these stocks are going to go down 75, 85%. And I remember the guy who was on with me laughed at me saying I didn't understand the market. I didn't. And Bitcoin was the same way. I didn't understand it at 40, 50, 60, 70,000. I did think it was going to go down like the dot-coms. And here we are. Again, my point is not to say, well, I'm the smartest person in the room. Clearly I'm not. I'm good at spotting manias and steering clear. You're getting to the point where it's late in the game for the bear market in crypto. It turns between now and sometime in 2023, and it's going to be a much better and safer for the investor kind of market. Not safe from volatility. You're going to have crazy moves, but I think you're going to have, Goldman and JP and the big Wall Street firms heavily involved as regulations come in. So if it's something you want to chat about, we can certainly talk about it. But I do think that folks should definitely consider the cryptocurrency market from here on in. All right, let me stop sharing my screen. Good. Let's see. I think I'm going to try to wrap it up now. I went longer than what a shock. I went longer than normal. That's me. And come back with another, some commentary on stocks, bonds, the more conventional markets. I'll close with this. What I want to close with. Inflation. So I've had thought inflation was going to peak. I said by the March, a year ago, I said by the March report of 2022, inflation was going to peak. So, and I'm not saying that I was totally right, totally wrong. The month-to-month inflation numbers did peak, I think, at the March report. So right at the outside of that range I gave. I didn't think it really was going to go into March, but in any case, inflation certainly has now peaked for this cycle. It doesn't mean it's peaked for good. I think this cycle, what's happening right now is inflation is moving lower. It should continue to go lower. And that's because the biggest inputs in inflation, which are not food and energy, it's things like rent. And rent, if you lease an apartment, a condo, you only get your rent changed usually once a year. So that's why it's taking so long. It's that you've got leases. Now you have to come up and see them roll over. Rent's a big one. I do think it's going down. Remember how crazy the used car market was? It was going nuts. I should have pulled up that chart. Do I have it here? Let me look and see if I have that. Because I saved so much on my screen. What's this recession? No, it's not it. All right. In any case, I don't have it on my screen quickly. So used car prices have just collapsed. And that's, if you sell used cars, I'm sorry, but it's good for the economy. It's good for the consumer. So I think inflation has peaked. The rally we saw on Thursday, I mean, we all knew at some point when inflation peaked, you were going to get some stupid rally. And what's interesting was, yeah, I guess I'll pull up a screen for you. What's interesting about Thursday was that, Let's do the S&P 500. So on Wednesday, all the way on the right side of the chart, we close rate basically at the low of the day. This big red candle means we close at the low of the day. And I know anecdotally, a lot of professionals came into that inflation number assuming it was going to be as expected or hotter than expected. It's not what happened. It came in cooler than expected or better than expected for if you're a consumer. So what happened was you go from here and then the market immediately jumps up several percent at the open. If you follow me on Twitter, you know, like after 5 minutes, I said, if they take out the first 5-minute high during the day, you're going to get acceleration. It trapped all the negative people. Well, look what happened during the day. So they took out that high pretty quickly, and then the market trended higher all day on Thursday because you trapped so many bears. When you have this big gap up like this, where no prices trade, which is right here, it's fun if you're on the right side of it because they just squeeze the bears and the people who are betting against the market. In actuality, it's much better, like this big green day here, which I did call as a low of significance or the low. Market opened sharply lower, closed sharply higher, lots of people going back and forth. That's a healthier day than the one where things just jump up at the open and trap people. So we'll see what happens this week, but it was certainly a fun day to be long. I can't complain. Trust me. We had plenty of longs on. I did sell a little bit of our semis on Wednesday because they were acting so poorly. And certainly, do I regret? Yeah, because the semis are up something like 10% the next 2 days. But we still had a big position in them in our sector strategy, just not as big as we did. So clearly, did we make a mistake? Yes, I made a mistake. And I'll learn from it. Or I hope to learn from it. In any case, so that's what happened. I doubt we're going to see another response like that anytime soon to an inflation report. That was just all that pent up short covering of so many folks who were positioned negatively on inflation. And I will close finally. Thank you for enduring and listening to me for all this time. I'll close by saying this. I still do believe that October 13th was at least a low of significance, if not the ultimate bear market bottom. So I'm operating as I told you guys one day after that bottom, I said, that's a low of significance. And now the question is, how significant, how important? Could it be the bear market bottom? Yes, it could. Do we know that yet? No, we don't. I want to see other things set up and develop. But so far, so good. We're making nice progress. But if you are a bear and want to argue with me, I would tell you to tell me, well, Paul, look what happened here in August. You know, we bottomed in June, we rallied, we declined, and then we took off. And that looked like it could have been the end. It did. You're right. I couldn't argue with that, except that a lot of things in the backdrop weren't in place. And remember, I've said this, I've written it, I've said it on TV, I've said it everywhere. Wherever the bear market bottoms, it is going to bottom before inflation rolls over, which if that's the bottom it did, it will bottom before the Fed stops raising rates. It will bottom before the Fed pivots. I felt strong. I still feel strongly. So if October 13th was the ultimate bottom, it did all those things. It bottomed before inflation got better, before the Fed stopped raising rates, and before the Fed pivoted. And with that, it's 12:40, and I have a Friendsgiving to go to this afternoon, which I'm looking forward to. And then I'm going to get ready for the Cowboys. And I'm still celebrating the Yukon Husky football team has now won 6 games after being among the worst teams in all of Division I for several years. New coach, new outlook. We are now bowl eligible. What used to be the Huskies that were the laughing stock are now relevant and competitive. So if you're in Connecticut, bleed blue, let's go Huskies. Thank you all for watching. I know I sometimes get off track and I'm a little long-winded, but I appreciate you watching. Please email me, call me, come in the office with questions, comments, concerns. You know, I'm always willing and able and enthusiastic about addressing them. So with that, thanks for watching. Have a happy Sunday. Give me a thumbs up on YouTube if you like what you saw today. And if not, I apologize. I do. See ya. Bye-bye.